of which, of course, earnings season starts really, I suppose, in fury tomorrow.
That's right. It'll be a good focus on the Australian market this week. There hasn't been a whole lot to focus on. Really, global events, including those US numbers and this Greece situation, has been focused on. But this week, a large number of very big companies on the Australian market reporting, including BHP and Rio. And what the market will be looking for is which of these companies are really going to be generating top-line growth. We saw in the US earnings season, it has been a tough last 6 months for companies. Revenue growth is likely to be subdued. So the market will be watching for that kind of growth, and EPS growth for 2012 looks to only be coming in fairly moderately, around 7 to 8%. So looking at different sectors of which we're going to be expecting to perform, obviously the mining sector will be the big one, and also mining services company related to that mining sector will be the ones likely to outperform, while the ones that are going to be having a difficult time, likely the retailers, the manufacturing, and also companies related to the housing market at the moment. We're seeing a high Aussie dollar really having a big effect on manufacturing and exporters recently, and we will be seeing that reflected in their reports. So tomorrow we've got Bradken. That'll be certainly one to watch. As I mentioned, mining sector, mining services stocks will be good performers, so that will be one to watch. Cochlear also reporting tomorrow. BHP and Rio, Newcrest later in the week, those mining ones.
This meeting takes on extra significance for market participants. What are you expecting?
It's hard to predict this one. It could sort of go either way. The majority of the market were leaning towards a rate cut of 25 basis points tomorrow. Money markets certainly factoring in a rate cut above 50%. But again, it's going to be a close decision. We've seen in those December labour force figures sort of a bit of weakness in labour demand, a tame fourth quarter 2011 inflation number. Those global uncertainties continue. Today, again, we saw a disappointing retail sales result. We saw sales falling 0.1%. So there's definitely space there to cut rates. But the question is whether the Reserve Bank will. And another question will be whether the big four banks and other lenders decide to pass on this rate cut in full to borrowers. And in a bit of analysis by Bell Potter, they've actually had a look at new mortgages at the current funding costs, and it is possible that the banks are not making a lot of profit on new mortgages at the moment due to these funding costs. So if the Reserve Bank was to cut rates tomorrow, the banks could well take this opportunity take this chance to adjust their net interest margins and try and make a bit of more profit on their new loans. So they're factoring in that if there was a rate cut tomorrow, the big banks could be looking to change their net interest margins in the vicinity of anywhere 10 to 15 basis points. So the bank's certainly probably looking for a rate cut tomorrow in order to consider not passing the full amount on to mortgage holders.
It's very much Perpetual. Their CEO leaving, apparently reports suggesting a bit of a stoush with the board. Perpetual shareholders probably think they should do this more often. Shares closing up almost 4%.
That's right. The market actually reacted quite positively today after news that CEO Chris Ryan will be leaving after less than 1 year in the job. So apparently it's differences between the board and Mr. Ryan over strategy for Perpetual as to why he is leaving. This just follows a few months after their top stock picker actually decided to leave the company to start his own boutique fund. So Ryan's mandate there at Perpetual was to overhaul the company. We saw some job cuts. We saw them sell off their smart super self-managed super fund business, which they actually failed to grow amongst other things. But Perpetual at the moment, funds under management around $27 billion, a very large company. One main point is their flagship equities fund continues to outperform the market. Over the last 12 months, we saw their wholesale equities fund outperform the ASX 300 accumulation index by over 5%. So certainly this is good for the company going forward in attracting retail investors. And Perpetual itself very well positioned to a rebound in investments, in investor sentiment, and when people decide to look back to moving more money back into equities, Perpetual will be a stock that is well positioned, but at the moment has been struggling due to the market conditions.